Okay, so good evening, everyone. Can everyone hear me clearly? Jeremy, just confirm for everyone, please. Can everyone hear me?
Yeah, I can hear you.
Hello,
Okay,
good evening.
great, good
Can you hear
evening.
me?
All right, thank you, yes, so that's confirmation I needed. So,
Hey, good evening. Yeah, this is David.
okay, so good evening, everyone, and good morning, good afternoon to those who are joining us from other jurisdictions. Well, let me start by asking that I hope that we are all keeping safe, observing safety guidelines with the ongoing pandemic. I mean, I hope we're all staying safe. Anyway, thank you. Thank you for joining this March edition of the monthly Ellen webinar. My name is Aditi Sodufuye. I'm a member of Ellen, and I'm an in-house counsel in an IT and telecom solutions company, and I'll be moderating the session today. For those joining us for the first time, I'll just give you a brief introduction into what Ellen is about and what we stand for. So Ellen stands for Employment and Labor Lawyers Association of Nigeria. We're a body of lawyers, both in private practice and in-house, with a passion for employment and labor law issues. As you can see on the screen, we intend to be at the forefront of public interest advocacy and litigation. We hope to contribute to policy formulation on labor law matters and other related matters, and to provide professional development for our members and the general public, which is what we're doing today. If you have any questions about Ellen, please feel free to contact any of these two persons with his email address and his telephone number. Oynena Eze, same email address, and her telephone number is also on the screen. We have this monthly webinars on topical issues, and typically we would invite experts to speak on whatever topic it is that we have for that month. This month we will be speaking on outsourcing arrangements, the tax implications for the ultimate employer, and other legal issues. And our speaker is Oyeyemi Oke, who is a partner at AO2 Law. He leads the energy finance and corporate practice of the firm. He's also an ED at Tax Aid Professional Services Limited. He's qualified, he has a dual qualification in law, and he's also a chartered accountant. He holds a master's in law from the University of KwaZulu-Natal in South Africa. Oyeyemi graduated with a second class upper division from the Nigerian Law School and the Lagos State University. Before I hand over the microphone to our speaker for today, please note that the session is in listen-only mode because the session is being recorded, and so it's important to maintain quiet. If you have any questions during the presentation, there are three ways to ask these questions. The first is that you can put it you can post it, which is there, or you can wait after the session. After the presentation, there'll be a question and answer session. You can wait after the session and you can raise your hand, you'll be unmuted and you can ask your question. To save time and to avoid repetition, if your question is similar to another question that has been posted on the chat box, please just like that question so we don't have to repeat the same question again. Okay, so with that, I would be handing over to Oyeyemi Oke for his presentation. Thank you. Oyeyemi.
Okay, thanks, Adi.
Yes, we can hear you. Yes.
So I want to try and share my screen.
Uh, can we see the slide on my screen?
Yes, I mean, we can see it, but just make it full screen.
Is it good?
Well, wait.
Can you,
Okay,
can
great,
we all see?
perfect. Yes, it's great.
Yes, we can.
Okay. Okay. The topic of discussion today is outsourcing arrangements and its tax implications. Tax implication for, and why I am just going to stop at saying the tax implication is that we're going to be looking at the tax implication both for who we would call the legal employer and the ultimate employer under this discourse. We would look at what the issues are, especially with regards to how outsourcing arrangements are treated by revenue authorities. In our experience as a firm, usually outsourcing arrangements sometimes could be tricky, especially on the part of the ultimate employer. Now, with regards to what an outsourcing arrangement is, I would assume that almost everyone here understands at least the basic concept of outsourcing. And essentially, it's an arrangement where workers who are not part of the ultimate employer's regular workforce are employed through a firm which is called the outsourcing firm or a labor brokerage firm. And in this regard, the employees or the persons who are employed will be regarded as the legal employees of the outsourcing firm and economically employed by the ultimate employer. So essentially, there are three parties to this type of arrangement. It's the outsourcing firm, the principal, who we call the economic employer, who is also regarded in this presentation as the ultimate employer. And the last party is the employee himself or herself. Now, we have tried a bit to also try to get what the definition of outsourcing is. And what I've been able to garner from the various definitions I've seen, is that it's just the use of third parties to perform tasks within an organization. And what this means is that rather than continue to put those persons employed on your payroll, you decide to get someone to take care of that headache for you. And sometimes the question will be, why do we need an outsourcing or an outsource arrangement as an organization? And usually the response is, what is the strategic direction of the organization? During the introduction, I need to mention that I'm also a partner at a firm called Tax Professional Services. And what we do essentially is...
sorry, Yemi. Hello, Yemi.
Yes, I can hear you.
Yes, sorry. I think maybe there's some interference from your end, something like the wind, or you're using a chest microphone or something. It's giving us some.
Fan.
The fan. Oh, great. Okay, so we're having some interference. Perfect. Please continue.
Okay. So.
Okay, it's coming back now.
Okay, just a minute. I'm sure it should be fine now.
Okay, great. Thank you. I hope we won't make you start sweating before
Hopefully
the questions. Thank you.
So, as I was saying, that I'm also partner at a firm called Tax Professional Services, and the model which we run essentially is that we are an outsourced firm, so we manage the tax functions of our clients. So usually the direction with regards to outsourcing is hinged on the strategic vision of an organization. Sometimes organizations will think that it's better to actually deal with their core functions and let another person handle some operational issues which are necessarily non-core. Now, I've also decided, I also looked at the revenues position with regards to what an outsourcing arrangement is. And I think the leading revenue authority, at least in Nigeria, apart from the FRS, is the Lagos State Internal Revenue Service. And an attempt was made at defining what an outsource or an outsourcing arrangement is. And they did this through a public notice on pay-as-you-earn on employee outsourcing arrangements. And the definition seems fairly long. I would try to read it out to give us a bit of context as to what an outsourcing arrangement is. In an employee outsourcing arrangement, workers who are not part of the ultimate employer's regular workforce may be employed through an outsourcing firm or labor broker. In this regard, the employees will be the legal employees of the outsourcing firm or labor broker, but economically employed by the ultimate employer. The employee remains on the payroll of the outsourcing firm. The ultimate employer pays the outsourcing firm a fee for procuring these employees, while the outsourcing firm pays the salaries of these employees. Now, the benefit for this outsourcing firm is that apart from the salaries which are charged, the outsourcing firm typically will charge a markup or a fee, which usually is a percentage of the value of the salaries paid to the employees. Now, in an outsourcing arrangement, the employees may be full-time or be working on a part-time basis. But usually, in my experience, what I've seen is that there's always a battle from a tax perspective as to who the employer is. I think this is the major issue when you're dealing with the revenue authorities, especially in the process of audits. Typically, when there is an audit and perhaps they see when they're looking at your books, they see certain employees or certain persons who are regarded as perhaps maybe we call them contract staff for the purpose of this discussion, or interim staff, or what have you. Usually at the point of audit, immediately that is mentioned, the the tax authorities are always put on always at an alert to ensure that the right taxes on those persons' income have been deducted and remitted. But the question is, who is the employer? Unfortunately, we do not have a clear-cut definition under the Personal Income Tax Act. And why we are using the Personal Income Tax Act for this conversation is that the taxes are ultimately paid by the employee, and the relevant legislation is the Personal Income Tax Act. Now, if we look at what the Personal Income Tax Act says, the question will be, how do we construe an employer? The Personal Income Tax Act defines employment to mean any appointment or office, whether public or otherwise, for which remuneration is payable, and an employee and employer shall be construed accordingly. So that was the best definition, or that is the best definition we have with regards to who an employer is. It tries to construe the definition of an employer within the context of the definition of employment. So that is quite helpful. And the inference I was able to make is that if we look at this definition, essentially what we are saying is that an employer is any person who offers an appointment or office for which remuneration is payable. This definition even is a bit unhelpful or confusing when you look at an outsourced arrangement where you have, as it were, two employers. And now the question would be, for the purpose of tax compliance, who would be the employer? So the question is it the legal employer? Is it the economic or ultimate employer? Or are the both of them employers under an outsourcing arrangement? There are certain provisions of the Personal Income Tax Act that tries to give us some kind of direction with regards to who an employer is. So if we look at section 81 and 82 of the Personal Income Tax Act and the Pay-as-you-earn regulation of 2002, with regards to the obligation of employers to deduct taxes, that may give us a bit of direction as to who should be an employer under an outsourcing or an outsourced arrangement. Now, Section 81 of the Personal Income Tax Act states that income tax chargeable on an employee by an assessment, whether or not the assessment has been made, shall, if the relevant tax authority so directs, be recoverable from any emolument paid or from any payment made on account of the emolument by the employer to the employee. If you look at section 82, which I think is even more clearer with regards to what the obligation of the employer is, generally, not necessarily even limited to outsourcing arrangements. It says an employer required or is required under a provision of this act to make deductions from emoluments or amounts on account of emoluments paid by an employee, and shall account to the relevant tax authority in such manner as the relevant tax authority may prescribe for the deduction so made, and in the event of failure by the employer to make the deduction or properly account, therefore, the amount thereof together with a penalty of 10% per annum of the amount plus interest at the commercial rates. So essentially, if we look at this definition, we may be tempted to say that the employer is legal employer, not the ultimate employer or the economic employer. And for me, I think, personally, I think that's the right way to look at it from a legal perspective. However, during the course of our conversation, we would see there are one or two, or there's actually a particular provision in the law that makes things a bit complicated. So if you look at paragraph 2 of the payee regulation, it also imposes an obligation to deduct taxes by it imposes an obligation on an employer to deduct taxes on his employees' emoluments and remit same to the relevant tax authority. Like I said, on the face of it, if we look at this provision, section 81 and 82 of PITA, and also paragraph 2.1 of the payee regulation, we can rightfully so at that say or conclude that the employer under an outsourcing arrangement is the legal employer, that is the outsourcing firm or the outsourced firm, as it were. Unfortunately, we now have a plot twist. And the plot twist to this is now that there is a provision under the payee regulation that complicates matters further. And I think this is where there is always, or is usually a point of dispute between the revenue authorities and taxpayers, or the revenue authorities and actually the ultimate employers. Now, and I think we should listen to this carefully, because this is where sometimes people fail to understand that there is a possibility that the ultimate employer may be held responsible in the event of default. So paragraph 2, sub 3 of the payee regulations provides that where the employee works under the supervision or management of a person who is not his employer, that is, if somebody works under another person and that person or the so-called supervisor is not the employer from perhaps a legal perspective, as we have seen, under an outsourced arrangement, that person will be regarded as a manager. And that person shall furnish the particulars of the employee's emolument as may be necessary to comply with the provisions of these regulations. And the manager shall deduct the tax due from the employee's emolument and remit same to the relevant tax authority. Now, I call this a plot twist because we've been going on the tangent that the employer is the legal employer, which in my view, like I said, is the right position from a legal perspective. However, the payee regulations have put a bit of complication to the arrangement to say that if, for example, you are supervising someone and that person works with you and you are exercising some kind of supervisory role over that person, then you shall be held responsible for the tax deductions and remittances of that person. Now, I said perhaps the employer under outsourcing arrangement is both the legal employer and the economic employer. I mean, definitely, without doubt, that if we take that approach, then we would have a confused state of affairs. Now, the question would be, what is now obtainable practically? And this is some of the things we're going to discuss here is based on experience with revenue authorities, especially when there's an audit. Now, the practical approach. While the payee regulations imposes an obligation on the economic employer to deduct tax due from the employee's emolument and remit same to the relevant tax authority, the first port of call is the legal employer. That means that in the event or the primary obligation of deducting and paying taxes on an outsourced employee's emolument, the primary obligation lies with the outsourced firm, that is the legal employer. So that is the primary obligation. But we see what paragraph 2.3 of the payee regulation has done. It has also now put some kind of obligation on the ultimate employer, irrespective of the fact that we have a primary obligation on the legal employer. Now, it follows, therefore, that the primary responsibility for payment of outsourced staff is that of the legal employer. The practical, so what happens? The question is, what happens where the legal employer defaults? By virtue of the payee regulation, the economic employer has an obligation to remit the taxes on the basis of the concept of manager. As we have seen under the payee regulation, if the legal employer does not pay the taxes that are due or underpays taxes, the legal employer, the economic employer or the ultimate employer may be held responsible on the basis that that employer is the manager. So what do revenue authorities do? While I've dealt with a couple of revenue authorities, I think perhaps maybe 2 or 3 are quite bullish with regards to the position on outsourced arrangements. There are 3 revenue authorities that I can say off the top of my head that are very, very inflexible with regards to the provisions of the payee regulation. You have the LRS, you have the River State Internal Revenue Service, and you also have the Akwa Ibom Internal Revenue Service. Those three revenue services are quite bullish on this point. And usually what they do is that in the event that there is any kind of default, whether it is non-payment or under remittance, they typically will look to the ultimate employer to make that payment. And for them, even apart from the fact that the payee regulations give them these powers, as it were, one of the things for them is that they look at the ultimate employer as the guys with the deep pockets. They are the guys that most likely would not want any kind of dispute with the revenue authorities and would typically want to comply. They know also that some of those ultimate employers are companies who do not take compliance with levity. So they, in addition to the fact that they actually have the powers under the payee regulations to go after the ultimate employer, they also work on that psychology. Now, the LRS has also issued a public notice, which I have mentioned or where I gleaned the definition of outsourcing arrangements for. And what they have said is that their official position, right, is that the employer that is referred to under the Personal Income Tax Act is actually the ultimate employer and not the legal employer. That's their position, and they've actually made that public. But the question will now be, is there any kind of protection for the economic employer? Why is this so? Because you can have a situation whereby you are a very compliant economic employer, you are a compliant company, but you just have an outsourced firm that is always non-compliant and really doesn't care or cares little about compliance. How can you protect yourself? And for me, is that you just have to be proactive in all what you're doing. And being proactive, you start from your your contracting process. Now, when you are entering into some kind of contract or the outsourcing contract, what you need to first of all do is to ensure that you have the proper belts and braces in your contracts. And the easy one, that is that there must be very robust indemnity provisions in your SLA that protects you from any kind of default in the event the legal employer defaults in its compliance obligation. While you can, while that is good, especially if it's the from a solicitor's perspective, having the necessary belts and braces is good, but do not forget that when the chips are down, right, the revenue authorities will come to you, and the best you can do is perhaps you have some kind of civil action against the legal employer in order to invoke the indemnity provisions or the protections that are, that is afforded to the ultimate employer under the SLA. Now, another thing to do is that you can have some kind of audit review process, even with the legal employer, the outsourced firm. You can have it in your SLA to say that we shall conduct random audits or what we call tax health checks. And essentially, as the ultimate employer, what you can do is that you ask the legal employer to provide evidences of deductions, evidences of remittance, and you do, like I said, an health check just to be sure that the right amount of taxes are paid. So one of the problems, or sometimes the challenge, is that people comply, but they do not comply fully. There's a difference between partial compliance and minimal compliance. What I tell clients is that at all times, ensure that you have minimal compliance, not partial compliance. Minimal compliance is the compliance that would ensure that at the minimum, everything you need to do has been done. Partial compliance will be a situation whereby you are not remitting the right amount of taxes. So if, for example, you have a tax obligation of 20 million naira and you decide to remit 10 million, under that instance, that is partial compliance. So one thing we've seen, and based on our experience with some of our clients, the random tax health checks, they work because if you have a vendor that is not compliant, you will quickly flag that or get that even before the revenue authorities come. Now, the last thing you can do is that when the revenue authorities come for statutory audits, which they do every year, before they come, we typically would advise that the economic employer should also audit itself, just to be sure that everything checks out. This is different from the random tax health checks because the random tax health checks are more regular than the pre-audits. The pre-audits would only come before you have a statutory audit by the revenue authority. And usually the idea or the thinking behind pre-audits is that you want to know what is your maximum tax exposure, or you want to know if you have not completely complied. Now, some of the other issues which I thought we should highlight is the issue of withholding taxes under outsourcing arrangements, because sometimes we also, or this could be a bit of a sticking point with regards to how the ultimate employer makes withholding tax deduction. As we may be aware, withholding tax is an advance payment of income tax, and the question would be, what does, or what would, or what amount actually would the outsourcing, I mean, would the ultimate employer levy withholding tax on? The question is it on the entire amount? That is it, would you levy withholding tax on the total amount which you pay to the employees plus your fees, or would it be only your fees? The position of the law, and this is the practice also by revenue authorities, is that anytime an invoice is issued by an outsourcing company, the outsourcing company should separate the actual cost, which is paying to the outsourced employees, and it should label that amount what we call a reimbursable expense. Then, as a separate line item, it should now put its fees. If that is done, then the applicable or withholding tax will be on the fees and not the entire contract amount. Failure to do this, typically what the revenue authorities will do will be, is that the revenue authorities will just assume that the total amount which is on the invoice is the fees payable to the outsourcing company and will levy withholding tax on that amount. So typically what we do is that we advise clients that ensure that you separate your invoice to show what the actual amount you pay and the actual amount you receive as your fees. Sometimes you have dodgy vendors who would not want to do that because of perhaps they may be quoting that they are paying the employees X and actually they are underpaying. Well, that is more of their problem, because what you would do if you are an ultimate employer is that the total amount on their invoice, you just levy or you charge or you deduct withholding tax on that amount. Now, what I've tried to do is that I've tried to look at a few scenarios in order to practicalize some of the conversations we've had. Now, scenario one, and what I did also is to just take this from the LRS website with regards to some of these scenarios. Now, where there is an outsourcing firm which provides individuals on an ad hoc basis to provide short-term services, in such scenario, the individuals that are contracted to provide the services are neither employees of the outsourcing firm or the ultimate employer. These individuals are independent contractors. Examples are, for example, when you decide to get ushers for an event, laborers for a temporary construction site, or if you want to develop a software app on an ad hoc basis. So the question will be, what will be the tax impact or tax treatment of this kind of arrangement? Now, the outsourcing firm is expected to deduct withholding tax at 5% when paying the individuals, as they are deemed to be independent contractors. That means that those individuals are not even going to be regarded as employees of the outsourcing firm. The ultimate employer is expected to deduct withholding tax on the service portion of the invoice issued by the outsourcing firm and treat the payment to the individuals as reimbursement, which is exempted from WHTA, as we have mentioned. Where the outsourcing firm does not separate the payments to the individuals from its service fee, then the withholding tax shall be applied on the entire amount on the invoice. The individuals are expected to account for the personal income tax on the income through direct assessment using the withholding tax deducted from their payment as a credit against the final or their final tax. As I have mentioned, withholding tax is an advance payment of income tax. So anytime there's a withholding tax deduction, the person whose income has suffered withholding tax has a right to to claim that amount as a credit against his or her final tax, or if it's a company, against its final tax. Scenario 2, where the outsourcing firm provides people on a more permanent basis to provide the ultimate employer, to provide services to the ultimate employer, the individuals contracted to provide the services may perform their functions in the offices of the ultimate employer, but the services being provided are not core. This category of individuals are workers as defined in the Labor Act, which include manual labor or clerical work, but excludes persons exercising administrative, executive, technical, or professional functions. While the employees may receive instructions from the ultimate employer, the services are non-core, that the individuals can be changed at any time. Now, what are the examples of this kind of services? You can have supply of cleaning staff, security staff, caterers, and what have you. What are the tax implications of this? The outsourcing firm is expected to deduct payee when paying the individuals, as they are considered as employees of the outsourcing firm. This is quite different from the initial scenario which we have seen. The ultimate employer is expected to deduct withholding tax on the service portion of the invoice issued by the outsourcing firm. Where the outsourcing firm does not separate the payment to the individual from its service fee, the withholding tax shall be applied on the total invoice amount. We have said this before as well. Now, the last point is where the outsourcing firm does not remit payee, the ultimate employer may be regarded as a manager as contemplated under the payee regulations and made liable for the non-remittance. Scenario 3 is very similar to scenario 2, and the tax treatment are basically the same. I'll just read the scenario, but essentially what I've said under scenario 2 in terms of the tax treatment is the same thing that will be done under this scenario. Where the outsourcing firm provides people on a more permanent basis to provide service to the ultimate employer, the individuals that are contracted to provide the service may perform their functions in the offices of the ultimate employer, and the services being provided are core. Then what is the tax treatment? Same thing, the outsourcing firm is expected to deduct payee. The ultimate employer is expected to deduct withholding tax on the services provided. And if there is a failure to remit payee by the outsourcing firm, the ultimate employer may be regarded as manager and may be liable for non-remittance. So essentially, I mean, we're getting to the end now. I think I'm about 5 minutes past my time. Essentially, what should you know if you are an if you're an ultimate employer? What are the things you should bear in mind when you are engaging a company to provide you with outsourcing services? In a nutshell, the following compliance requirements are relevant. The first is that the outsourcing firm is expected to deduct and remit payee. The outsourcing firm is expected to file annual payee returns, which is supposed to be done by the 31st of January of every year. If this is not done, please bear in mind that if the outsourcing firm is an unincorporated business, the fine is 50,000. If it's a company, the fine is 500,000. 3, the ultimate employer is to deduct withholding tax on fees for services provided by the outsourcing firm. And the last is that the ultimate employer is to ensure that the outsourcing firm complies with the foregoing obligation, else it is at risk of being regarded as manager of the outsourced employees and responsible for the payment, or may be responsible for the payment of the taxes of the outsourced employees. What are the potential exposure? 10% penalty, and depending on the relevant tax authority, interest may be as high as 21%. Now, this is for Lagos State. So, for example, if there is an issue and there is an exposure, you may be paying as high as 31% of the amount which you have failed to remit, or which the outsourced firm has actually failed to remit. Interest generally ranges between 19% and 21%, depending on the relevant tax authority. So you may have potential exposure of 29%, and at the minimum, and may be as high as 21%. 21% for certain tax authorities. I think that's the end of the discussion. At this point, I'm ready to take questions, and perhaps, I think perhaps then we can take the conversation further from there.
Okay, thank you very much, Oyeyemi.
But I would just crave your indulgence. The heat is killing me a bit, so I would just want to adjust the fan, and we can. Thank you.
Okay. Yes, but please just don't direct it too close to the microphone so that people can hear you when you're answering the questions. Okay.
That's fine.
Okay. Thank you, Oyeyemi. Okay, so from the chat box, we have just one question from Toyosi, and Toyosi has asked you to expatiate on the invoice part. But I have another question, which I think draws from that as well. And you had said that on the invoice, to ensure that you're not taxed on the entire amount, the amount payable to the resources, to the outsourced employees, should be itemized on the invoice as reimbursable expenses, and then the fees to the outsourcing company should be a separate line, so that's the only portion that will be taxed. So the question
Yes.
I have here is that how does that then tie into the concept of this triangular employment? Because if you designate that amount as reimbursable and a reimbursable expense, does that then not mean that the ultimate employer is the payer and is only channeling the amount through this through the outsourcing company, and cannot then subsequently argue that they're not the employers of that, they're not the direct employers of those resources? So if you can just answer the question together. Thank you. And the invoice.
Okay. I think the first question with regards to, I'm trying to look for the chat box. But I think the first question is tied to your question as well. So let me start with the first question, which is the invoicing. One of the major issues with taxation is documentation. So the more documents you have as a taxpayer, the better position you may be. Now, if, for example, you now have an invoice, so let's practicalize it a bit. I give you a contract to say, please get me cleaners for my office. The monthly invoice, or we agree to say you are going to pay 5 of them, or let's say 4 of them, 50,000 naira each. That's 200,000 naira. Then for your troubles, because I don't want to relate with them and all that, for your troubles, we put a markup of 10%. So that means that your total invoice, or the total amount I'm supposed to pay you, is 220,000 naira. But in reality, your fees, or the amount that comes to your pocket, is actually 20,000 naira. So the issue is that you do not want to put yourself in a position whereby you are being overtaxed, as it were. So when you are issuing your invoice, you must show that the 200,000 naira is not income that would accrue to you ultimately. It's an amount which you are using to, or you have used to pay Mr. A, B, C, and D, which is, as it were, it is an expense which you have incurred, for which you should be reimbursed. So you have to separate that. Then you now say my fee for providing this service is 20,000 naira. Then you can now levy whether it's 10% withholding tax or 5% withholding tax, depending on the entity that is contracting. Then you can now levy withholding tax on the 20,000, as opposed to you being subject to withholding tax of on 220,000 naira. Because if you go and do that, or if that is done, then you would see that the withholding tax will be eating into, it will be eating more into your income, and that is not, that's not supposed to be the position. Now, so I think that answers that question. Then the question Adetutu has asked is the issue of whether, and I think your concern is perhaps maybe issues around constructive employment and all that, and whether the employer or the employee cannot now ultimately say that my legal employer is not my employer, but you, who is the economic employer, are my employer for the purpose of perhaps maybe making a claim or any kind of contractual obligation. So sometimes the concern we have, or what I see, is that tax, in as much as it is highly entrenched in law, the way you treat some tax issues are quite different from how you would look at maybe a typical master-servant relationship, if I may use that word. So to answer your question, the issue about the ultimate employer being responsible for the tax obligations of the outsourced company, right, stops at the tax level. So that means that in the event whereby you have a situation where the employee is trying to make a claim to say that my legal employer is not my employer for the purpose of maybe contractual obligations or some kind of employment obligation, and wants to or seeks to pull in the ultimate employer into the arrangement. In my view, this is not possible, because the employment actually, and that's why I've been using the issue of legal employer and the economic employer. Your legal relationship as an outsourced employee is with your legal employer. And if you have any other employment issue, then you deal with your legal employer and not the ultimate employer. I hope that answers it.
Yes, thank you, Oyeyemi. Okay, so we have another question from Tunde Olagunju, who's asked you to please shed a little more light on hiring of ad hoc staff directly and calculating WHT on their pay.
Okay, so if, for example, you decide to go and hire ad hoc staff, one of the things you have to do is that you must clearly, no matter how, and don't forget that one of the things I said is that taxes is highly based on documentation. You must clearly state that that employer, that employee or that ad hoc staff is an ad hoc staff. You don't want to find yourself in a situation whereby if you do not clearly say that, the revenue authorities may now attribute that employer to you, for which you'll be responsible for paying deductions. But to answer your question directly, if you have a situation whereby you have employed ad hoc staff, what you need to do is that you should deduct withholding tax. And because they are individuals, the applicable withholding tax will be 5% on the invoice value or the amount which you're supposed to pay them. So the rights, in terms of calculation, we just deduct 5% on the amount you are supposed to pay them, and they can go away. Now, the problem with having ad hoc staff, again, is that you need to be careful and this is looking at it from maybe an audit perspective when the revenue authorities come. Also, in the event that you employ someone as ad hoc, I would, in my view, if somebody is working with you for an extended period of time, then that person may not necessarily qualify as ad hoc. But I hear you say that what would qualify as extended period of time? I think if you have someone for a period of more than 6 months, in my view, then that would be an extended period of time, and you may be running the risk of being responsible for the payee of such persons. So my advice would be that perhaps you should ensure that you do not employ ad hoc staff for an extended period of time, so that the revenue authorities will not hold you responsible for payee deductions as opposed to withholding tax.
Thank you, Oyeyemi. I hope that answers your question. Jami, do you have anybody raising their hands to ask a question? I have another question here, if you don't have anyone.
I have a question of my own, if you don't mind.
Okay.
Before you take those other questions. Okay, and thank you, Yemi, for the presentation. I was just wondering that from what you've said, the ultimate employer seems to have a lot of disadvantage, if I can put it that way, because at the end of the day, even if he forwards the taxes to the outsourcing firm and the outsourcing firm does not remit it, the tax authorities may come after the ultimate employer. So, and I'm wondering whether based on what you've said, is it better for the ultimate employer to just take up that responsibility in the outsourcing contract to say, I will be responsible for paying tax, and or in the alternative, if the contract provides for an obligation on the outsourcing firm to pay that tax, and it doesn't do so, will the contract itself, that clause in the contract saying the outsourcing firm has undertaken to pay, will it be enough to absolve the ultimate employer of liability?
Okay. As they say, there are many ways to skin a cat, and it depends on how you want to handle it, right? One of the reasons why I have outsourced as an ultimate employer is that I do not want any kind of headache. So if I now decide as an ultimate employer to take the responsibility of paying the taxes, then in my view, that defeats the purpose of outsourcing in the first place. Now, from a process perspective also, you know that when you are going to remit the taxes, because you are not really the legal employer of those employees, the question is, you are remitting those taxes as who? Would you now go through the process of going to get the tax identification number of the legal employer? You have to be writing the name of the legal employer before you go and remit tax. I think it's just a bit cumbersome. So, in my view, that option may not, or the first option which you have suggested, may not, or defeats the purpose of outsourcing. Now, so that leaves us with two other options, right? We've seen clients, based on my experience, what we've seen is that we've seen clients that would employ firms like ours, right, to say, you know what, we have some kind of concerns from a compliance perspective with regards to how this company or this outsourced firm can comply. So what they would now do is that we are going to employ your organization to do the tax remittance on behalf of this legal employer. So essentially what they have done again is to outsource the tax compliance function. So what organizations like ours will now do will be that we are going to be liaising with the legal employer in order to ensure that we get the right, and we go to remit the taxes on behalf of the legal employer and provide evidence of remittance of those taxes. Now, that is another approach. Now, this approach, some may say, especially if you are cost sensitive, some may say that this adds another layer of cost to us as an organization, for which perhaps maybe they do not have the budget for it, or they just feel from a cost saving perspective, why should we incur this cost? And they decide to go through the third option, which is that we are going to ensure that the legal employer complies with this with this obligation. How do we do that? We would have quarterly reconciliation exercises, whereby every quarter we ask them to provide us with the evidence of tax remittance. We do our own tax computation, and we ensure that the right amount of taxes are paid. So if that is done, then you are able to quickly see. If you employ someone or you give an outsourced contract for 1 year, immediately there is non-compliance within the first 3 months, you will know, and you are able to nip that in the bud, either by saying that go and comply, or if you see that these guys are consistently, or they are consistent defaulters, then under that circumstance, you can decide to even terminate. Because if you do not terminate, it's a question of when will the problem ultimately get back to you as the economic employer. So those are the three options. Like I said, the first option is a bit too cumbersome, and the other two options are things that can be considered by an ultimate employer.
Okay, we have two people who seem to have questions. Let me just confirm from Richard whether he has a question or is raising his hand for another reason. Richard Obi, do you have a question?
Okay, so I think my question has been answered. So if it's around the slide, which a response has popped in. So I think I'm okay.
Okay, okay, thank you.
Thank you.
Dayo,
Thank you.
you have a question.
Yes, I do.
Please
Can I go ahead? Okay, Mr. Oke, thank you for that presentation. I know you've spoken more about the tax implication. The other aspect of the title says other legal issues. What are the few legal issues that you think we should also look at with respect to outsourcing, considering one, we have the data regulation which has come into effect, and also in the view of COVID-19, we'll probably be seeing a lot of outsourcing going to offshore organizations and offshore jurisdiction in other jurisdictions, especially now that remote working is beginning to, take a firm position in the global landscape. Yeah, just to have your view on this and other legal issue that you think we should have at our mind.
Okay, I think from the perspective of data protection is very, very vital. And if you look at what is happening now, so let me give a good example. For example, if you engage taxing professional services to provide you with outsourced tax management function with regards to payroll, right? Because we as an organization will be handling some of the payroll data of the principal, right? We need to ensure that we are compliant with the provisions of the NDPR as data controllers, as data processors or administrators, rather. So from a data protection perspective, outsourcing is also outsourcing from a data protection perspective is very, very, data protection is very key. You must ensure that in your relevant outsourcing contracts, you should have data protection clauses. A good thing is that the NDPR is relatively new. It's just about a year old. So everyone is a space whereby everyone is still grappling and trying to understand what the impact of a data breach would mean. But I think situating the issue of outsourcing into the discourse of data protection, I don't know how many of us were aware. We are aware about the data breach that happened. I think in December. I think December 27th or 28th of last year, whereby, and interestingly, it has to do with the tax authority, whereby the information of certain taxpayers were made available to the public, and it was a data breach issue. And eventually, NITDA as a supervisory authority, in the course of its investigation and all that, found out that what may have happened was that there was a principal-agent relationship whereby this revenue authority had an outsourced firm carry out certain data processing activities on its behalf. And it was eventually seen that the data breach actually happened not with the principal, but with the outsourced firm. So, that keys into the issue that when you are outsourcing, you must also be very, very mindful of issues around data protection. And the first thing you need to do is your contracts. Ensure that you let the counterparty or the outsourced firm know its obligations under the NDPR. That's one. Indemnity provisions and all that, that's true. And also in the event whereby there is a breach, one of the things you should bear in mind as a data controller, who is the principal under the outsourcing arrangement, is that when the chips are down, right, the procedure is that in the event of a breach, the regulatory authority, such as NITDA, will come after the data controller, that is the ultimate employer. So the ultimate employer also needs to be very careful when dealing with the outsourced firm as it relates to data protection. I think the other part of the conversation which you have which you have alluded to, is the issue of perhaps remote working arrangements and instances whereby you use offshore entities to provide outsourced services. And I would have to draw you back also to issues around data protection. If you do that kind of, if you have that kind of arrangement, you should also be mindful that under the NDPR, there are certain obligations that are imposed on a data processor or a controller with regards to transfer of data out of Nigeria. You must follow certain procedures under the NDPR. And if that is borne in mind from a compliance perspective, you should be fine.
Okay, someone else has a question. Wala Joseph, I will unmute you for a few minutes to ask your questions.
Okay.
Please go ahead.
Hello, Yemi. My question is, I don't think it's something that would necessarily be answered now, but I thought maybe to just chip in a little bit, and I'm kind of piggybacking on the last person's comments or questions. And he had said something regarding, outsourcing and labor laws and things like that. And I don't know if we all know that there's a bill before the National Assembly to actually criminalize outsourcing arrangements and prohibit it. So I would have said, if there's something you could speak to regarding the implications, but I'm thinking, I know it's a fairly recent bill. Maybe it's something that you want to go look at and have another session with us, hopefully, sometime soon, to just understand the implications on our business. My company does a lot of outsourcing, which I know you know because you consult with us. It will have a huge impact on our operations. And so it's something that I would, honestly like, I would like you to just give some perspective on if you have seen that bill, and if you've not, if you'd like to have a session with us, maybe sometime later to just talk about it. Because from what the bill says, I know there was a committee put together to look at the labor laws, and one of their recommendations is to just criminalize the entire outsourcing arrangement. So if you have a staff that is in an outsourcing arrangement for 6 months, you must staff that staff. So that's something I just thought to chip in. I don't know what your position or comments would be on that. Thank you.
Okay. I recently also got to know of that bill, but I think one of the things I've seen so far is that our lawmakers could be a bit, for the lack of better expression, myopic in considering issues. Why we may have a situation where the thought of criminalizing an outsourcing arrangement may be on the basis of casualization, labor casualization, and perhaps maybe the lawmakers are looking at that, at the issue from that perspective. But for me, it's also a question of how competitive do we want to be as a country. Outsourcing arrangement is something that is commonplace, and if we decide to ban that kind of arrangement or criminalize that kind of arrangement, if we look at it as a whole, it may be, we may be finding ourselves in a situation whereby we become less competitive as a country. And the question will be, what is the cost to us as an organization, I mean, as a country? Because if you decide to criminalize an outsourcing arrangement, that does not necessarily create the jobs which you want, because it may be a situation whereby someone may even just look at the economics of doing business in Nigeria and say, I am not ready to do business in Nigeria if I cannot outsource, and the person packs his bag or her bag to leave. So that may be counterproductive, and I hear you about perhaps it may be a topic for future discourse, which I'm sure the organizers of this event have taken note.
Okay, thank you very much for that. Onyinda Mola wants to ask a question. I will unmute her to ask a question. Onyinda, you're on.
Okay. All right. Good afternoon, everybody. Thank you, Oyeyemi, for that very beautiful presentation. It was very enlightening. It's actually not a question, it's more of a comment on the previous question asked on the NDPR and outsourcing arrangement. My comment is, okay, I advise a couple of outsourcing companies, and what I've noticed and what I would like to advise if you're working for an ultimate employer is to probably have data protection clauses in your SLAs. Then before, or maybe in the course of if you're already into some outsourcing arrangements, you could just do like a data protection audit and say, okay, for example, can you show us maybe an example of your information notice, just find out their own compliance with the recent data protection policies, both in Nigeria and, outside Nigeria, if they're going to be processing, outside Nigeria. I just wanted to say that. Anyway, let me just close it there because I wanted to start commenting on this remote. Let me just end it there. Thank you so much, Oyeyemi, for your presentation.
Thank you.
Okay, I'm not sure that we have any other questions on the group, but if I may
there's
take...
one more question. There's one more question. Okay, so
please go on with it.
So outsourcing arrangements, I know are packaged in different ways. They don't necessarily call them outsourcing arrangements. Some people have this as services contracts or services agreements. So my question is, what kind of tax? So, behind, if you look through that service agreement, you can tell at the end of the day there's a manpower or it's an outsourcing arrangement or whatever it is, but you haven't called it an outsourcing arrangement. You haven't, what you advised on the invoice. You haven't structured your invoice such that it reflects that part of it is for salaries and part of it is your fees. You've lumped it together as a service, so you're paying for that service. Can you just confirm that it's only WHT that would apply on that and not and no other tax?
I confirm that it's only WHT that would apply. But let me speak. Let me expatiate a bit.
Okay.
So, it depends on the kind of service. Now, and I would also just situate it within what I do every day. So, for example, we have some clients that do not have a tax department at all. They just have perhaps maybe the CFO or maybe even the tax manager, and that's it. So with regards to the day-to-day tax compliance, we are the ones that file for such companies. We are the ones that make payments on behalf of such companies. Essentially, we are the boots on the ground with regards to tax compliance. Now, if you look at it, what that ultimate employer, quote and unquote now, has done is to employ our firm as an outsourced firm. Essentially, we're providing outsourced tax management service. But in the real sense, we do not have people sitting in the client's office. So we do everything on our own. Under that instance, when we issue bills or when we issue invoices, the only amount that will be subject to, what will happen is that is the entire amount that we issue, or the entire invoice amount that we issue, that will be subject to withholding taxes. Because you cannot, you cannot say that you have employed Mr. A, Mr. B, and they are dedicated resource to that company. So what happens with regards to invoice separation is when you have dedicated resource, and that resource does not do any other thing but performs functions on behalf of that client. That is when you can have a situation of splitting your invoice to the actual salaries and also the fees. So I think that answers it. It's so to answer your question again directly, I confirm that under the circumstance which you have described, the only amount or the only applicable tax will be withholding tax.
I'm sorry, let me just clarify that quickly. Yes, I understand, the kind of service you are performing is in a sense consultancy. So you can lump that up as a service. But again, yes, people have to bypass, or again, because of the co-employment risks, I've seen situations where people have structured an outsourcing arrangement in various ways, such that clear at the onset that it's an outsourcing arrangement. When you look behind it, so like I said, I've seen situations where people engage a company for secretarial services, and under the secretarial service, you say receptionist services, photocopying services, or whatever. If you look behind it, it's a manpower service agreement, because at the end of the day, it's individuals that are going to perform these services. Though the contract between the two companies is a services agreement, but at the end of the day, the individuals performing that service. Individuals sitting in many cases in the office of the ultimate employer. So how is that looked on by the tax authorities?
Yeah, so to the extent that you are unable to separate the invoice, you will just apply withholding tax on the entire invoice amount. So, for example, if I am an outsourced firm, what I would just want to ensure is that the applicable rates or the applicable fee which I charge is not diminished by virtue of that arrangement. But to the extent that you cannot separate the invoice into the actual amount paid and your fees, then the applicable thing to do will be to levy withholding tax on the entire invoice.
Okay, thank you. That's clear.
Okay, so sorry that it's the organizer now barraging you with questions, but the more you speak, the more scenarios play out in our heads. I've been involved in a number of litigations regarding outsourcing arrangements. Most times when we are able to successfully get the court to hold the ultimate employer responsible as the employer, really, because I'm hearing for the first time during your presentation now that there's something like legal employer and what was the other one? Economic employer. So, but in advising your clients, I don't know if you've had this as a consideration or if it's something you've seen before, because the arguments we usually use as litigators is to use the control test. So control test being that the person who is exercising control over that worker, usually in terms of payment of salary, pensions, providing work tools, controlling their hours of work and all of that, should be held to be the employer. So if someone is held to pay tax and all of that on behalf of an outsourced staff, have you ever adverted your mind or had situations where they then become exposed to litigation, maybe even by the staff themselves? So this is my employer, is the one that has been paying my tax. Then final one from me is this issue of the ad hoc workers, who you say neither the outsourcing firm or the ultimate employer is regarded as the employer for tax purposes. So does it mean those people are free to just work without paying taxes? How do the tax authorities hold them, drag them into the tax net?
Okay, if we start with the first question, which is the issue of, and I want to start with the first question because I think it's very easy. I will defer to you. You are the litigator. but what comes to mind with regards to whether an ultimate employer will be regarded as the employer from an employment perspective. I mean, for me, is also, in addition to the fact that it's a question of contract, I think also when you look at the issues, it will also be a question of facts surrounding the circumstance, right? And I think that's where the angle, that's the angle from which the payee regulation is looking at issues. That if, for example, someone is working under you, you are the one providing the person a job description, you are the one telling him or her, do A, do B, do X, do Y, then in the real sense, you are the employer. And if that person doesn't pay tax, or if the person who you have said should employ you does not pay tax, then I should be able to hold you responsible. Now, in my experience, and that's why I said I am not a litigator, and I would want to defer to you with regards to how the court would look at this. But in my experience, I've not seen, or I've seen maybe one, whereby and it's companies in the oil and gas space, whereby you have an outsourced arrangement, and the outsourced employees were looking towards bringing the employer into the mix. The economic employer into the mix. But for me, and I may be wrong, but for me, to the extent that you have a contract with Mr. A, right? And Mr. A has, for the lack of better expression, seconded you to Mr. B's employment, it still doesn't automatically make you an employee of Mr. B, right? But these are, this may be debatable based on the peculiarity of the circumstance of each case. Now, to answer the other question, so if you have an ad hoc arrangement, when you deduct withholding tax, don't forget that one of the primary, not primary, but you and I and everyone on this call have a responsibility to file our tax returns, whether payee is deducted or not, or in addition to the payee deductions, you and I are supposed to file our tax returns. And unfortunately for COVID, but for COVID, we ought to file by Tuesday, which is the 31st of March, right? So what does this mean? This means that the guys who have been employed on an ad hoc basis are supposed to file their tax returns under what we call the direct assessment arrangement, whereby they fill the relevant form, and I think the form is Form A for LRS. They fill the relevant forms and they get assessed to taxes. And what would happen is that the withholding tax that has been deducted by you as the ultimate, as the employer for the ad hoc job will be taken into account as a credit against the tax liability. So let's put the figures there. So let's say, for example, they provide you a service and you pay them 100,000 naira. You deduct withholding tax of 5%, which is 5,000 naira. Now, they have gone to work in several other places, and their total income for the year perhaps is 1 million naira. And their relevant taxes, let's also estimate if the effective tax rate as of today is about 19%. So their relevant tax will be about 190,000 naira. Now, when they are assessed to tax, or when they go to file their tax returns and they are ultimately assessed to tax, their total tax liability is 190,000 naira. But do not forget that you have already deducted 5,000 naira as withholding tax. So what will happen is that 5,000 naira will be regarded as a credit. Then their total cash payout in terms of what they would part with will be 185,000 naira. So to answer your question, they do not walk away, right? They will be subject to taxes through the direct assessment method.
Okay, thank you again, Oyeyemi. I believe that's the last question. Jamiu.
Yes, please.
Okay, Han. So if there are no further questions, I think we can call it a day. Thank you everyone for joining the live session of this month's webinar. Please remember to stay safe, and we hope to have you in the next month's session. If you have any questions, please reach out to Jamiu Akolade or Inena Ize. Their contacts are on the screen. Thank you all, and have a good evening. Thank you, Oyeyemi, again.
Thank you very much. Bye. Bye.
Thank you, Yemi. Bye. Bye, everybody.
Bye.